What's up, everyone? Welcome back to the Crypto Mavericks pod. Super excited today to have one of the co-founders of the Say blockchain on here, Jeff Feng. Welcome.
Thanks for having me on, Joe. It's a pleasure to be here.
Thanks for coming on. We had a whirlwind well, not even the first quarter of 2025 and Trump's first presidency, being in office. Tell us how it's been, how's it going? Tell us a little bit about how you came about to find Say Labs.
Yeah, I can give maybe a quick bit of context for everyone on sort of how Say came to be, and then I'll share a briefer on just what the last sort of couple months have looked like for the team, especially in the midst of the whirlwind that has been the administration change. The TLDR on how Say had gotten started was my co-founder and I. We were both born and raised in the Bay Area, and so San Francisco around the Bay, and we had spent our entire lives there. He had spent almost 4 years at Robinhood, led out a
Oh,
big part
nice.
of the crypto engineering effort there, and the initial um, area that we were particularly excited by was building almost like a decentralized sort of trustless Robinhood. A lot of where that need came to be um, came about during the GameStop sort of saga. That entire saga with Robinhood, and maybe as a briefing for the audience, for folks that weren't familiar with what happened with Robinhood and GameStop. Basically, the TLDR is there was a lot of excitement around GameStop, the sort of stock, but mostly as more of the sort of movement against Wall Street versus your everyday purchaser of equities like yourself or me individually. And Robinhood effectively shut off purchases and sales of uh, GME, the GameStop stock, without any sort of heads up, without any sort of context to even people on the Robinhood team. So almost taking away the liberties of all Robinhood users to actually purchase, any sort of stock that they wanted. Um, that came as a big surprise to Jay and his engineering team. That certainly impacted a lot of the trust that they had in their organization, and that's one of the biggest impetuses for why we had even initially wanted to start building a decentralized version of Robinhood. So almost think about it as a trustless exchange. What became pretty apparent when we were even scoping this out was it's actually impossible to build a competitor to Robinhood that is on current blockchains. We looked at Ethereum at the time. We looked at Solana. We looked at Avalanche, Optimism, and all the different options at the time. And it became pretty clear that you can try building it. It's just never going to get to that kind of scale, never going to get to that kind of throughput. So imagine if you put in an order to purchase like a share of Apple, for example, and it actually took until like 3 days to actually complete that purchase. That's just that kind of user experience is incredibly tough to compete with compared to something like just using Robinhood today. So that was the clear heads up that something like Say needed to exist. Think about Say as the destination for all kind of financial transactions. And the way we get there is by combining the strongest in the strengths of Ethereum, which is the fact that everyone already knows how to code on EVM. It's a development framework that is very much universal. It's the same way that if you look at most of the apps today, they're built in Python. It's just the coding language. It's almost like think of it as like the English of languages. Is English the ideal language when it comes to math, when it comes to communications? You can certainly argue that other languages are better, but it's the one that everyone knows. Just practically has the largest network effect. So that's Ethereum's biggest strength. Solana's biggest strength is the fact that it uses updated hardware. So it's just like the laptops that you and I use today. They use better hardware than laptops of 10 years ago. One of the big sort of advancements has just been the ability to do parallelized um, compute. So simply doing two things at once that don't have a dependence on each other. It's like cooking two dishes at the same time on one stove. So those are the two big combinations that Say makes on the technology layer. And today, if you fast forward There's well over $300 million worth of TVL on the chain, over 150 different applications that are live. There's a lot of different founders that are experimenting using this sort of speed and the throughput that we've offered them through the infrastructure, and just building a ton of different brand new experiments. So that's a bit about sort of how the ecosystem has grown today.
That's awesome. Back then, before we were Crypto Mavericks, we were Real Talk NFT, and I first heard of Say through the Say in NFTs because I wasn't deep in the DeFi stages during that time, and yeah, I really didn't know how where you guys stood in terms of your expertise. But after doing some research for our interview, definitely you guys shine in the world of traditional finance, DeFi, making sure that adoption's there. How's that journey been so far? It's been a whirlwind, right? I'm sure it's only been less than 2 years since you guys launched, and a lot of new changes with regulations. Are companies, approaching you guys now saying, "Hey, how do we start to get ahead of what's coming?"
Yeah, yeah, absolutely. I'll talk a bit about sort of NFTs and finance and DeFi and how it all intertwines. One of the things that we've spent well over the last 2 years really trying to educate the user base and the market on is almost everything in crypto comes down to finance. It's the transfer of value, and that includes NFTs. So the big sort of thing that people did with NFTs back just over 12 months ago, when NFTs were particularly more exciting and on trend at the time, was trade. It was exchanging the value that they sort of pinned to a certain NFT, being able to exchange that for tokens, being able to exchange that for cash. So almost like the collectibles component is still very financialized. You can say the same thing for every category of crypto today. There's a heavy financial angle. So that's if we're able to focus on just that use case, it ends up encompassing almost everything that exists in crypto today. In terms of what we drill into what the last couple months have particularly looked like, one of the biggest changes has obviously been the administration. The U.S. in particular has been very unclear when it comes to legislation, when it comes to providing guidelines for founders and projects, crypto projects in the U.S. and how they can operate. Yeah, in a pretty clear fashion. We're starting to take steps and move towards that kind of clarity, and you're immediately starting to see that change when it comes to behavior of a lot of companies that we work with. A lot of the companies that build and are considering to build on top of Say. So a big part of the change in conversations has been the main question has shifted from how like can we build? Is it even possible for us to build and work on chain and on blockchains, especially on a blockchain like Say? To the main question being, how do we do it? Exactly what does that sort of build look like? So we're taking baby steps there, but at least the buy-ins there when it comes to the companies, it's just a matter of exactly what that sort of involvement looks like, and that's where I can help out as a consultant and make sure to guide companies and clients in the right way.
Yeah, you mentioned a lot of the transactions today are 99.9% monetarily driven. There's something that's really, I wouldn't say disruptive, but it's really taking the spotlight in crypto this last few months. It was also AI, right? AI is integrated seamlessly because crypto doesn't have as many guardrails yet as the financial institutions. Tell us about that. I could see something like a sports analytics that's just launched an AI agent. That data is not as monetarily driven, but how does that fit within say itself and the crypto space overall?
Yeah, I can maybe start by trying to specify exactly what does AI and crypto sort of look like, because people always sort of talk about that very high level. It doesn't really mean much unless you try to really get into the weeds of things,
Mm.
outside of just being purely a mimetic sort of theme that people can maybe purchase like meme coins off of, at least today. I think we're starting to see major advancements on the ground floor in the trenches when it comes to AI and crypto product development. By and large, comes from agents. What an agent means is, let's say, my day job is trading tokens. or buying collectibles. And that's how I make my living. It's buying and flipping collectibles, just like people do that in shoes, just like people do that with houses. Um, One of the things that are already are happening with collectibles is when you go and try to buy like a new Supreme or like a really exciting new Nike shoe drop, you're competing against a lot of robots. These are bots that are able to move fast, click really fast, and clean these shoes faster than like probably most normal people can do. So this idea that if you set up these sort of bots, they can go about doing the work of claiming and making you money as a collector. You don't actually need to be awake. This can happen when you're just flat out asleep at night. There's a big swath of that opportunity in DeFi, on-chain, in crypto. There's a ton of opportunities that happen when you're asleep because crypto is 24/7. And one of the big value props of buying and selling Bitcoin, for example, compared with buying and selling stocks is you can do that at any time versus stocks you can't do it over the weekend.
Yep.
Um, so imagine being able to easily spin up robots, agents that are able to buy and sell and perform actions when you're asleep, when you're not, when you're on vacation, when you need to spend time with the family. Um, so helping you keep that business going, helping you capture revenue opportunities, make money in times where you're not constantly on your computer. That's the sort of baseline use case of an agent. You can use that as an example. As more and more agents get spun up that are actually performing actions on chain, there's going to be a need to pay other agents. Maybe you're relying on one agent is relying on another agent to perform this activity, and then relying on a different agent to perform another activity. Agents that are spun up for certain purposes that are specialized for capturing a certain type of opportunity. Let's just say one agent's focused on Nike shoe drops, another agent is focused on think of like Supreme kind of drops, right? Two different types of agents. You're going to need to pay them for each of their services. That payment will live on the blockchain. Reason being, it's because a lot of these payments happen on the weekends. That's the purpose of these agents. Purpose of these agents is not to work from 9 to 5. I'm probably on the laptop. I'm doing my job then. It's to work after hours over the weekend. The bank is not available to make those payments. You cannot have a human in the loop there. It needs to be on the blockchain. So that sort of payments layer, I'd say, is a big opportunity. That's one that particularly stays uniquely built for because of that kind of performance, because of that kind of throughput, especially as the agent economy sort of grows. So hopefully that's like a sort of a simple example to illustrate exactly where we think the AI opportunity has like the most actual product market fit. Today, it's by and large mostly just people buying like memes and the excitement there. But when we're talking about real substance, that's where we're seeing probably the most traction.
Yeah. How far do you think we're away from that? Because to your point, it started off with memes, and then now I'm seeing more intricate use cases. You think that's happening in 2025?
Yeah, the pretty insane thing about AI and how the intelligence has progressed is even if you look at the progress of the last 12 months, the models have improved hand over fist, magnitudes in terms of their ability to process longer pieces of information, some more inputs, and come out with more sophisticated outputs, sort of avoiding as much of the hallucination and the errors that we saw in the first iteration of OpenAI's ChatGPT. So now the model is, I would argue, probably more intelligent on a broad basis than the average person, particularly the average college educated person, which if you just simply plot out that line and that kind of improvement, yes, it's going to take, I'd say maybe a year, 2 years for it to surpass most people's intelligence at a college educated level. So easily, smarter than myself. And I think that's a lot of opportunity.
Yeah, I can't wait for it. I'm just really excited, and I just love talking about it and seeing it evolved. As time goes on. We talked about exchanging monetary value a lot between even agents. A big topic. Trump might be talking about it right now. He's doing a live speech right now. Actually, we're missing it. Is stablecoins. Stablecoin regulations, the lowest hanging fruit. It can save the U.S. economy, billions in fees because we're looking to borrow money for ourselves. We see a lot of blockchains launching, their own stablecoins. What's Say's view on that? Are you guys going to get into that game yourself? And how do you see, what regulations may come for that, if any?
Yeah. So on behalf of maybe to be a bit more clear, I founded Say Labs, but no longer am part of that organization. And I mostly just consult when it comes to the State Foundation helping grow the ecosystem. I think on behalf of the ecosystem, absolutely. Stablecoins is going to be a big part of AI payments, for example. It's like they're still going to need to pay each other in an existing currency that can be transferred into something of like real value very easily, off ramped into something that when the creator itself or like the collector is able to like purchase through dinner, the next day. Um, so stablecoins will be a critical part of making the AI economy get started on, say, as well as other kind of different financial forms of factors like buying NFTs, like anything in DeFi, anything in gaming as well. So it is a huge part of uh, the ecosystem priority, at least when it comes to foundation. When it comes to actually getting involved in building products like a stablecoin, uh, I don't think it necessarily makes sense for any blockchain to do that. The core goal of the foundation is just to grow the infrastructure and provide this open source infrastructure, make it easy for people to use it, make it easy for people to benefit, and access a broader user base, build the applications that they want to build. Building a stablecoin is not very, doesn't really directly contribute to that kind of mission. In fact, it could actually compete with a lot of the sort of great stablecoin issuers like Circle, like Tether, and like several other projects that are out there today. So, the last thing that the foundation wants to be is competitive with any of the great founders that build an ecosystem.
Yeah, absolutely. Yeah, personally, I'm just starting to wrap my head around the unique use cases for it myself. I think there's a big gap between traditional finance and understanding the world of crypto finance and DeFi. Your head kind of spins, right? Coinbase just announced, I think yesterday or 2 days ago, they're starting liquidity pools, and for the average person, they're like, "What the hell is that?" Right? But the gap is it's being more transparent. The middleman's being taken out. We can be that person. We can leverage our stables, our assets to earn yield. I know that Say per se is not, you're not a master of finance. It's a blockchain helping to improve throughput and infrastructure, like you said. But what's your thoughts on that? Like in terms of finance, meaning the world's blending together. How's that going to unfold? Is there a big gap in adoption, or is that coming like pretty fast and furious?
Is there any particular aspect of finance, or you just mean that in broad?
Yeah, I mean, like Coinbase is talking about putting their Coinbase stock ticker on base. Franklin Templeton's putting things on chain, just like everything's kind of going on chain, it seems. And yeah, like and there's a mechanism, there's a feature I would say that will layer on top of our financial strategies. Personally, for myself, right? I'm in finance and just brought index funds, but understanding yield, something that's so simple on your stables. Just will it be integrated through education for the masses, or is that, or masses just not going to come on board and they're not going to play with DeFi at all?
Yeah. Yeah, I think it's a great question. It's taken quite a lot of time for especially institutions to recognize the value prop of having any kind of asset tokenized or placed on chain. And honestly, for good reason. Like, there's been plenty of exploits in crypto. There's definitely been a lot of sort of funds and projects that have failed. So all of the volatility inherent to this brand new industry um, certainly turns off a lot of very responsible asset managers. That all makes sense and why it's taken this long. With that being said, stablecoins is still the greatest case study of the benefits of taking something like the US dollar and having a representation exist on chain. When it comes to the transfer of those assets being available 24/7, when it comes to the cost of transferring those assets. So across the board, there are a huge amount of benefits, and it makes it very easy for a lot of people globally to access the US dollar when a lot of the times, the legislation, governments that aren't always acting in the best interests of the people are making it very difficult. We'll show sort of one example. Um, Venezuela is like a country globally that is most certainly known for having a currency that just like is very, very unstable. So imagine if your bank account, you plan on being able to buy a house, but tomorrow the currency declines in value and you can no longer buy that house. Obviously, that makes it incredibly stressful to actually be a resident and a citizen of that country. Uh, the US dollar is a lot more stable relative to Venezuela's currency. But naturally, it's incredibly difficult to access the US dollar, and I can imagine that being in the seats of you know Venezuela, they're not making it any easier to access the dollar. From their perspective, they want to obviously still maintain the value of their currency, and they want to make it easier for people in their country to hold the currency. So that's one sort of simple example of exactly where the stablecoin value shines, and just making it easier for people in countries if they want to hold the US dollar to be able to access it.
Yeah, that's very interesting. Just as not a financial expert, but I imagine just take a country like Japan, right? They're just their yen's being pummeled, and if they're able to trade it out in terms of a stable coin from a yen to a dollar, immediately low transaction fees, whatnot, and then should U.S. dollar hold its value while the yen drops, they just immediately convert it back when they need to use it, right? And it costs them nothing to do that. I mean, what's stopping individuals from doing that right now? Nothing, right?
There's a lot stopping them from doing easily
Okay.
now, because of how difficult the user experience still is on chain. So we're seeing the early inklings of it, but a lot of that usage comes from people who spend a lot of time online. They've gone through the user onboarding. They understand how to use some of these applications on chain. They know how to use some of the things that are accessible on Safe, for example, or Ethereum. Um, the average person absolutely does not have time, to deal with that stuff. They have a full time job, they have a family to take care of. They don't have time to spend these hours, on their laptop and rummaging around on chain like I do. Uh, so making that user experience easier is still the big gap that needs to be filled, and that's most certainly a big value prop of why applications and DeFi apps seems to build on Say. It's coming down to the speed and the cheapness of using something like Say. The transaction on Say is a sort of minuscule fraction of that on Ethereum, and settles much faster than even Solana. So imagine, if you're exchanging your Japanese yen for a dollar, being able to get that within the course of a couple of hours versus a couple of seconds. I think that can make a big difference in the user experience, and that's why apps do so.
Yeah, it must be coming really fast. I'm getting emails from Gemini for their credit card. MetaMask has a credit card, a debit card testing in the States. And like you said, AI agents can help with kind of that mechanism, right? I'm somewhat in the world of DeFi where, they have that already, right? They're helping you to auto compound the rebases and whatnot. So I'm just curious. You have a background in Goldman Sachs, and you might not be an expert here, but that's going to have a ripple, I'm sure, through regular economics, the regular trend. And man, I'm surprised that this is the first time I've asked this question. I've talked to a lot of blockchains before, a lot of DeFi protocols before. You're right. The average person is not there, but I mean, once they understand that, I mean, people change bank accounts just for an extra percent of APR, right? Like I can't imagine it's that difficult, especially when there's individuals who have tens of thousands of dollars just sitting there.
Yeah, and look, that's a. I think you brought up a perfect point. I think just the amount of hurdles that people go through to open a new bank account just to like play a couple extra bips or to capture like a $5,000 sort of bonus, um, or the credit card game, right? Those sort of existing games that the financial system has built to honestly hook in users. I think some of it's most certainly malicious. For example, like the super short key credit card lines. So there are a lot of pitfalls that are already built in traditional finance. And that's if anything one of the big benefits of DeFi is there's a rebuilding of that system from scratch. So a lot of the sort of age-old tricks that the institutions have sort of built in, we can really build around and build it user first. A lot of it does come down to education. So the podcast, precisely like what you spend your time on, and helping spread this and make it easier for people to understand and feel like it's not as dangerous as obviously the media makes it to be, is a really important part of that process.
Yeah, understanding the risk, especially stables. A lot of people think there's no risk there, but there could be smart contract risk, right? There could be, bad actors from the back door somehow. There could be maybe a bank run if they're not collateralized correctly, right? And you got to trust the right chain. You got to trust the right dApps on there. And personally, I'm just, probably knee deep in it myself, understanding, like you said, credit card rates. I mean, credit card rates are insane right now. They're like 20, 30%. I've never seen that in my life. I'm a little bit older than you. I remember when credit card rates were like 7%. But yeah, but just on DeFi alone, like you can stake your stables, you can lend it out and you can earn a yield. Maybe you're not Chase or Bank of America, but you could be a mini one. But there are inherent risks to that. But if someone like me, who's not Berkeley educated like yourself, UC Irvine, yay, can get through, some of these hurdles, I imagine people. I would say I'm more positive that a large amount of people who understand just the basics of finance can come to an agreement. Like, hey, let's go here. The returns are better. It's supposedly safer. I have access to it 24/7, and I am in control. I'm not giving over a person like, even if SVB Bank, right? They got shut down because they were leveraging the right things. It was just the economy was bad, right? There's so many things that people don't understand financially, but I see it as an education factor for the entire world, and I think it's a good thing. So I'm excited. I'm excited for what you guys are building. Tell us what's coming down the road for you guys.
Yeah, I think that's right on point. In terms of what we're looking at down the roadmap, yeah, there's a lot of things that are currently coals in the fire. So a lot of companies, a lot of organizations and projects that a lot of the audience will really be familiar with have been in touch with the foundation, looking for ways to get involved on Say, on all the opportunities on Say, or just building applications and taking advantage of this sort of ultra performant infrastructure. So a lot of those things you'll probably start to see announcement wise over the coming couple months, for the rest of at least 2025. I'd say that's probably the biggest point. On the Say Lab side, they've been working on a update to the open source architecture for Say. Almost think of it as a Giga. Say Giga is the right way to think about it. A simple way to think about Say Giga is it takes the performance of Say today, magnifies it another almost 50x. So further expanding it and making it that much more faster and performant than everything that exists today. So maybe right now it's there are still pros and cons, and projects still need to be selective over where they want to build. Hopefully, after Giga launches, it'll be pretty damn clear that there is nothing else even close to being as performant and giving projects a good user experience for their users as it is.
It's awesome. One last question for you, since you have the Goldman background. What do you think? We are in terms of crypto overall as a macro. Things have been really choppy because of tariffs, the economic outlook. How do you think we end up 2025?
Yeah, your guess is as good as mine. And if anyone from Goldman says otherwise, they're probably far too overconfident. There's maybe a caveat. That being said, if I had to give my best guess, I think one of the common questions I get asked, just me being full time in crypto, is where do you think this sort of market pullback is longer term? Do you think it's like something short term? Where do you see the sort of year ending out? One of the big changes that have happened this time around, and this happens every time the crypto goes down, it's like if it's not already been evident at this point, crypto is insanely cyclical. It always goes through these ups and downs, and that's precisely what happens with all types of financial markets. This is not the first time we've done this. The stock market has been precisely the exact same. Human emotions always kind of go overboard, right? They're either too down in the dumps or way too exuberant. Um, when you look at the actual kind of looking past the noise into the actual advancements and the progress that's being made in the industry, this time it's very real. There have been many cycles in the past where a lot of that, the sort of the rise in prices has not actually correlated to any real progress, just a lot more speculation. This time with the Bitcoin ETF, the Ethereum ETF, with all of these large companies that have been the trusted holders of trillions of dollars of user assets, actually spending meaningful investment, not sort of checking the box types of investment, but meaningful strategic pivots into expanding crypto. Some of the best companies that we're familiar with, Stripe, Facebook, etc. Um, that kind of progress is pretty undeniable, right? And I think this time it's a lot more meaningful. It's companies that take a much longer term approach. When BlackRock does something, they don't do it just as a 2-year trade, right? To come in and out. They make a big business change because they think that over the next several decades, this will be a meaningful impact on the broader consumer population. So a lot of the actual progress that's happening behind the scenes is very real. Um, that's I'd say probably the thing that makes me most bullish on the longer term trajectory of the industry, and you can probably extrapolate some idea in pricing from that.
Yeah, that's super insightful, and thank you for that. I'm super excited, and thank you to Trump for green lighting everything, and boo to the previous administration for choke point 2.0 and just holding us back. I had a lot of friends driven off to Asia, running events in Asia, and now they're starting to come back a little bit because pastures are a little bit more green here. So I'm excited overall for audio adoption. I'm excited for what you guys are doing over at Say with the traditional finance, helping traditional finance. Jeff, it's been great. How can people find you if you want to be found?
I'd say most active on Twitter. So follow me on Twitter at Jeff D Feng, and then obviously a lot of the updates from Say and the ecosystem, everything that's happening there, you'll also find on Twitter as well.
Amazing. Would love to have you back in the future, Jeff. Crypto moves so fast. There's probably 10 different things we could talk about next time. Thank you so much for coming on.
Always a pleasure.